Exports from Hong Kong to the Czech Republic fell by 30% for the first 2 months of 2010. And yet, the Czech Republic's economy, we're told, is quite stable. Why the disconnect? With us is the consultant in Prague for the Hong Kong Trade Development Council, Filip Korinek. Filip, thanks very much indeed for joining us. So really looking at those figures, what would you say is the reason for them? And what is the way forward, would you say, for the Czech Republic's consumer market?
Czech Republic is already growing. In the first quarter of this year, we have seen good GDP development with a 1% growth. This is coming after decreases of GDP over the last year, and with a short delay after the same recovery has happened in Germany, which is our strong export market, strong customer. So I'm very positive that this growth of GDP will very soon also be reflected in further growth of imports from Hong Kong. We have seen very good numbers over the previous years, and the consumption will come back again.
So what are the export sectors that you see doing particularly well for Hong Kong?
The main imports of the Czech Republic and Slovakia from Hong Kong are electronic and electrical appliances and devices, IT equipment, office equipment, computers, but also parts of different products that we produce in the Czech Republic, including parts for musical instruments, for instance. And I believe these will be the categories that will continue growing. They will continue to be strong categories. There are also some market niches that we see coming out now, which include, for instance, pet supplies. Czechs and Slovaks are pet lovers. There's also increasing trend of shopping online, and people shop online for electronics, for different IT gadgets, and this will certainly continue as well. E-shops in the Czech Republic have recorded 20 to 30% growth in sales last year.
So the recovery in the Czech Republic's consumer market isn't reflected necessarily in the Czech export figures. What's the reason for that?
We see the exports come first. We are very much export focused. Export is behind about 75% of our GDP. And our main trading partners are in the EU. About 85% of our exports go to the EU, and a large part of this goes to Germany. So although our economy was fundamentally healthy when the crisis broke out, it did influence us as well, because our customers in Western Europe stopped buying. And this is both for genuine Czech products made in the Czech Republic, and also for products that are outsourced from Czech Republic by German corporations, German buyers, produce for them and under their brands, and maybe by companies that they actually own within the Czech Republic. Once the recovery started in Western Europe, and it already did, although it's quite slight, it's coming to the Czech Republic as well, and the consumer demand will pick up as well in a few months' time.
So that if you were to compare, let's say, the Czech Republic's performances against Hungary and Poland, how would they all compare?
The Czech Republic has been a leader in the whole region of Central and Eastern Europe, only behind Slovenia, which is a small ex-Yugoslav republic of only 2 million people. The Czech Republic is a very interesting market, very powerful. Its population is 10 million people, and Slovakia, they used to be one country, has 5 million people. These are the markets that I overlook. And Poland has 40 million people, but the purchasing power in Poland is significantly lower. If you look at the volume of imports from Hong Kong to the Czech Republic plus Slovakia, they are the same as in Poland, and very similar to Hungary. Hungary is the leader of imports from Hong Kong to the region at this point. But certainly these three markets you have listed are way above anybody else. The Czech Republic plus Slovakia actually import the same volume of Hong Kong products as all of Russia.
Quite recently, we've seen Czech Republic companies coming here to Hong Kong to source. Do you see that trend continuing?
Very much so. Czech companies have already been coming to source from Hong Kong and from China through Hong Kong for a long time. That will continue, I have no doubt about that. But also, we see increasingly Czech companies looking at Hong Kong and putting it on their business map as a place to sell their products or through which to sell it to China. We see some traditional, strong Czech brands planning to enter China. We see some that are already selling there. For instance, the car manufacturer Skoda doubled their sales in China last year. We also see the traditional brand of Becherovka, which is a liqueur, traditional based on a secret recipe. They have very radical plans of entering China with their drink as a luxury drink. We're currently talking to them about the possibility to exhibit the wine fair in Hong Kong. We also see a company called Alo Jewelry. They're planning to open a range of their own shops. They're currently selling in 12 countries to around 300 shops next to brands like Dior and Cartier. They have a plan of opening their own boutiques, including some in Paris and Hong Kong in the next 2 or 3 years. And there are others.
So you could say that Hong Kong is on the map for the Czech Republic.
It's getting there even more so than it was in the past. The Czechs still, of course, are not a strong group of investors or traders among other nations in Hong Kong. But certainly there is a massive increase in interest that I can see, and I believe it will continue, not only because Asia is now stronger than ever in global terms, which was made even faster with the crisis in the Western world, but also because Czech companies over the past 20 years, since the political system changed in our country, have first started to, they became successful on the Czech market and the Slovak market, then they started exporting to the rest of the region, Western Europe as well, and now they are ready to look further, including overseas, including China and Asia.